Markets move. Like herds of buffalo, deer, or elk, the markets are living, breathing things. But the markets aren't on the prowl for food. They're in search of balance. So what makes the markets actually move? Buyers and sellers. People just like you and me. Now, I have fantastic news. You can make money doing both. You can be a buyer and a seller. Now, that's the beauty of the markets like the Forex. You can make money selling just as fast as you can make it buying. However, before you ring that cash register, you must understand what moves the markets and how to get on the right side of price action.
So why does a market move? Imbalance. More specifically, an imbalance between buyers and sellers. Now, price action exhibits heightened volatility when the buy-sell dynamic is out of whack. Thus, the market moves. Now, make no mistake, buying and selling are two very different actions. However, despite the differences, the goal of each is exactly the same: to make money. Now, a buyer aims to profit from rising prices, while sellers want to profit from falling prices. Understanding market moves isn't rocket science. When there are more buyers than sellers, asset prices rise. When there are more sellers than buyers, price action falls. It's that simple. Think of the market as a roller coaster. As buyers gain control of the market, the coaster builds momentum and rises to new heights. Then, the buying fades, sellers take control, and the roller coaster plunges back to earth. The two sides go back and forth, creating countless twists and turns as price action seeks equilibrium. Now, as long as the coaster's moving, we can make money. Rally, crash, it doesn't matter. If we're on the right side of the market, we win. At any given moment, there's one question that every trader must answer. Do I buy or do I sell? Now, the answer to the question depends on a number of factors, namely strategy and your own personal goals. Ultimately, psychology is the driving force behind the decision to buy or sell. It's psychology that motivates traders to take action in an attempt to profit. Buyers are motivated to hunt bargains and buy low. On the other hand, sellers are inclined to dump overbought assets and sell high. In a nutshell, buyers want to buy low and sellers want to sell high.
A moving market is a target-rich environment. Price action and volatility are the keys to our fortunes. We can make money from either rising or falling prices. All we have to do is get on the right side of the market. Now, we can be buyers, we can be sellers, or we can be both. It truly doesn't matter. What we can't do is get caught in the middle. Bulls make money, bears make money, and sheep get slaughtered. Don't be a sheep. Have a compelling reason to buy or sell each and every trade. The rest will fall into place.